Good morning from Los Angeles. Welcome to Trading with Sergio, Wednesday edition. Every Monday and Wednesday, Trading with Sergio, and every Friday, Power Hour, 10 a.m. Pacific, 1 p.m. Eastern, and every Wednesday, 4:30 p.m. Pacific, members only live. So those are the 4 live streams that I do. They last about an hour. They're interactive. I will put the link up shortly for any of you to come on and voice your opinions or ask questions. Today is the big day. As we know, market's been grinding higher and higher since last Friday's Jay Powell speech in Wyoming, where he kind of sounded not dovish, but he hinted towards a couple of rate cuts this year. I just put out a video actually on Monday. Why is the Fed cutting rates? And it was pretty popular. Today, I'm putting out a video at noon Pacific about Nvda. Nvidia's earnings are due after the close today. And I think it's going to be very meaningful, not the earnings, but their guidance, what they say about going forward. And I think that's going to rule the AI space for at least a quarter. With all the cutbacks, actually, Facebook is announcing. Look, a lot of people have different opinions about AI. Some people think it's a bubble. Some people think it's the next coming of the internet revolution that we experienced. We know how the dot-com bubble ended, but then we can't have very short-term views about these things. These things are changing the world, right? And what AI has done so far and probably will do, we don't even know. We don't know the pros, we don't know the cons, but valuations of all these companies, from OpenAI to Anthropic and these are all private companies at the moment, are astronomical, okay? We're talking $500 billion for OpenAI. Does it deserve that valuation? I am not sure. But what I think Nvidia, as a public company and as the leader in AI chips specifically, and being at an all-time high, and being at a $4.5 trillion market cap, is going to be very important, the earnings that are coming after the close. Is it priced for perfection? Probably is. The expectations are about a plus or minus 6% move. That's what the option markets are indicating. A lot of YOLOers and will go into way out of the money weekly expiring calls on Friday with ridiculous IVs. But then if you're going to get that 6% move, obviously on $182 stock, we're talking 12, 15 points up or down. It's rare that a company like Nvidia moves that much. I think there was one occasion in the past 4 quarters that it did actually move the expected range. I don't know what's going to happen. So I usually try to stay away from trading around earnings, especially on a company like Nvidia. But again, today I have a video coming out on Nvidia. The title is pretty accurate. Is it a $4.5 trillion jewel, or is it a $4.5 trillion bubble? I have some other videos coming up putting Nvidia's size in context with what other stock markets. I'm talking total market capitalization of markets. So Nvidia basically at $4.5 trillion in market cap is larger than the GDP of a vast majority of countries on the planet. That's one. It's larger than a $4.5 trillion. Is larger than the DAX, which is the German stock market, definitely the French stock market, definitely the Canadian stock market, definitely the UK stock market, and I think it's larger than the Chinese stock market. market capitalization I'm talking about. And I'm talking the total market capitalization. So on the DAX, I don't know how many public companies there are, but obviously, you know, we know some of the names that we deal with, the Mercedeses and all these things. But the point I'm trying to make at $4.5 trillion, is that valuation justified going forward? Because Wall Street looks forward. It doesn't look like Wall Street's not going to care for this quarter how much of a beat Nvidia is going to present from the last quarter or year over year. Wall Street's going to definitely look forward and listen into very carefully on the guidance, what they're going to say going forward. I believe if Nvidia hints even at not just a slowdown, we're not talking going backwards. Obviously, the earnings are going to be fantastic, but if they even hint of the growth slowing down from mid double digits to lower double digits, I think it's going to get hit. But again, this is all short-term trading. If we look at Nvidia's past, I mean, if anybody bought Nvidia over the last, I don't know, 5 years, look where you are, right? Did it have corrections? Massive corrections. Absolutely did. In April, it had one to the tune of 40, close to 50%. But then, you know, like everything else, we can't be just super short-term traders. You know, we do that, obviously. Try to figure out where the next 5-10 points is going to come from, but over long periods of time on secular growth stocks like Nvidia, right? Buying and holding is the proper thing to do, although the drawdowns are painful when they do show up. And we have had a couple of those, right? We had one during the last year's Japanese yen carry crisis, and we had one in April during tariff Liberation Day. But then where's Nvidia today? Literally at an all-time high. So, you know, I do question these things. I do try to figure out where AI belongs today and where AI is going to be in a couple of years, 5 years, and 10 years down the road. I don't know. I'm not an expert, but I can say that it's already creating some issues for the average American, which is going to be, look, AI is going to do everything better than pretty much all of us, and it's already doing it. I look at AI as like a 2-year-old child. As a 2-year-old child, it already is smarter than most humans on the planet. And where is it going to be in a couple of more years? And the speed that this is improving. And Nvidia is the poster child of AI, as a public company. So kudos to the management that they were able to pivot the company from a gaming GPU maker, right? But then Nvidia management has been so on the money that, you know, it started with gaming GPUs. Then when the crypto boom hit to the miners of these, right? They created that. That was another wave, but the biggest wave that they figured out it was coming and then positioned the company was these AI chips. And they're in extreme high demand because there is hundreds of billions of dollars worth of these data centers going up. And in these data centers, NVIDIA chips are necessary by the thousands in order to feed this AI animal that we're creating. So will I trade NVIDIA? Probably not. Around earnings, no. Let the dust settle maybe a day or two, and then not even a day, maybe by tomorrow. Because when you're trading around earnings, especially with an expected move of 6%, 7%, especially if you're trading short-term options, and if you're trading options, or if you're trading the 2x ETF, which is NVDL in NVIDIA's case, shorting it, buying calls, selling puts, whatever you're doing, you have to understand that you're dealing with extremely high increased implied volatility levels. Implied volatility is a very important factor to figure into when you're trading options, short-term or long-term. Obviously, if you go out a month out to regular expiration September, the IV is not as high as the weekly expirations ones because the market makers have adjusted the IV to the point to consider that 6 to 7% expected move to show up in NVIDIA. And, you know, if you buy the calls, even if the stock does move, and if the stock doesn't move 5, 6, 7% tomorrow, your direction, you could be bullish. You may have bought calls expiring Friday. Let's say stock is 182, 183. You bought the 200 calls. Okay, you're going YOLO. Most people, most Robinhooders are good at that. You're buying all these options. Well, somebody's selling them to you, right? Well, they're selling them to you. They're either doing cover calls or it's the market maker that's selling it to you, and then they go hedge themselves, obviously, because market maker is not in the business of gambling. So what are they going to do, right? So even if the stock moves tomorrow 4%, let's say, not the expected 6 or 7, if it moves 4%, because of the high implied volatility crush is going to happen, and your options are going to hit the wall literally at the open tomorrow. So I will look at the prices on it and then comment on it when I go into the charts. But it is really, really something we all need to be careful if we're trading around earnings. Trading around earnings is not for everyone. Although this earnings season for the S&P 500 has been amazing, right? 85% of the companies either met or beat expectations in the S&P 500, and that's why we're grinding higher. We're probably at an all-time high as we speak in SPX. Not so much in the triple Qs yet, but it's getting there. So yeah, today is going to be it, and I do believe Nvda is going to rule. The earnings of Nvda and the forward guidance on Nvda is going to rule what we're going to experience probably for the next couple of months. So seasonality comes into factor. Obviously, September, October is not the best seasonality for the markets. The year end is, and so we'll see what happens. So I'll answer some questions. Good morning, good afternoon. Thank you, Will. I appreciate it. Yeah, I'm definitely going live on X and YouTube, and I'm going to add LinkedIn. Let's see. I'm gonna, StreamYard allows me to add as many platforms as possible. Might as well. If I'm doing it, why not do it? Sergio, what's your thought on September being slow? Should we stay in cash? Well, my account is personal trading account, not the investment account. Investment account is about 70% invested, as you all know from my members group, and what stocks there are in there. There are 4 stocks in there, and some cash secured puts on an individual stock. No, September, October are not good months historically. Anyway, seasonality, right? October is most of the trouble when it shows up. There's September OPEX coming up, which is quad witching, and there is always some major moves around OPEX. So look, the market's been extremely quiet since last Friday. Last Friday was the big move. We're just basically kind of going sideways to grinding higher. I honestly think market is waiting for Nvidia earnings because that's the last big one in the S&P 500. And I don't think, look, market's never slow. The indexes may be grinding higher, 0.5%, 1/4% here and there, or lower when the sell-offs come. But if you look at the underlying stocks, because most of us, if you're DCAing, obviously you own an index, you're happy. But if you own underlying stocks, we know how much they move, irrespective of what the index is doing. Granted, where the index is going, rising tide lifting all boats makes sense. But you may have a stock that's down 50% this year, right? So individual issues, no, they're moving, and we know what they are, right? We do trade them in our chat group. So when I keep saying chat group, by the way, I do have a Telegram chat group that I created for the members of the channel. So I appreciate the support. If you're interested, email me, sergio@sergioavedian.com. I will send you the link of the Telegram chat group. They get a live stream of their own every Wednesday where it's more one-on-one kind of a tutoring session, and I can answer their questions personally. Number 2, they get my trades live. What I do is very risky. None of it is trading or financial or investment advice. But I post my trades live and I post my positions live. And with full transparency for the regular subscribers, I post my positions every Monday, Wednesday, and Friday on the community page of the YouTube channel, where you can go check it out. Again, none of it is trading, financial, or investment advice. What I do is very risky. It works for me. It may not work for you. Do your own due diligence. So no, I don't think it's going to be slow. I mean, it's never slow. Whatever you own is moving a lot more than the index. So, and we know that. So I don't think it's slow. It depends on what you got. So what I'll do is I'll go through the positions real quick. And in fact, you know what? Before I go through the positions, so you guys can decide to join or not, let me post the link of the stream. You guys are more than welcome to grab it and come on. The only thing I'm asking you is that if you do come on, just be in a reasonably quiet place with a good internet reception so we don't get cut off. We can discuss whatever you want to discuss. And let me just go quickly through the positions. Like I said, full transparency on this channel. I do it pretty much on every live stream. And then I'll go through some charts. We'll look at some Nvda options. Let's see how ridiculously expensive those calls and puts are for this Friday. And so I'm sure you guys can see this. I'm down to 5 positions. I have 20 calls, just 20 calls, August 20 calls on AED and technologies. I mean, the stock is acting okay, actually. The next one is now this is a pretty decent position. I'm long 140 CoreWeave 2X ETF calls, 15 calls. These are also August, September 19th expiration, regular expiration. You know, my mistake was to buy these when the IV was about 170 and down from 220, and then now it's down to 130. And this is what happens. Stock is going the right direction for you, but then you're losing money. The next position is I am long 100 NEO October $5 puts. This is a lotto ticket. I think I paid 22 cents for it or something like that. Yeah, 22.41 cents. They're exactly where they're at. Stock is 643. Earnings are coming out, I think, on September 2nd or 3rd. It's just a little position I took. This one, actually, I'm going to add now. I'm long 2,500 shares of PPSI, Pioneer Power Solutions. Good earnings. Stock was as high as close to 6. Started buying at about 370. It's down to 341. Let's buy 500 more shares of that. I'll buy it down to about 3 levels, but I'll just buy 500 shares at a time. Probably get up to 5,000 shares on this. Let's pay 343 for that. Okay, that order is in. Okay, and I'm long 2,200 shares of SoundHound. I really don't like this position since the day I bought it. It's been going down, going against me. I did sell calls lower. My cost base is down about $1. Will I add to it? Not really. If Nvidia's earnings are bad, is this going to get hammered? Yeah. And to answer the question, by the way, one of the members of chat group said, should we go cash? My account is about 86% in cash. So it's a 6-figure account. It's a decent sized account, and I'm about 86% cash. I'm really just stepping lightly, perfectly honest with you guys and gals. You know, once Nvidia's earnings are out, again, it's not going to make or break anything, unless it does make or break anything. And then, you know, look, I sell things as fast as I buy things. It's a matter of figuring out what the risk is. It's a matter of diversification to a point. I'm not a huge fan of that in trading accounts. In investment accounts, yes, to a point I am. And then, you know, sometimes you step it up and press. Sometimes you just pull back. But all of it with the mind that allocation is really, really key. So if you have $10, a $10 account, I'm just being, you know, giving an example, hypothetical. You shouldn't be putting 50% of it in one stock, because now you don't have dry powder to shoot in case things happen. Because look, as much as I hear on YouTube and Twitter and other platforms, oh, I know what's going to happen. You know, they draw lines on charts. Look, charts, okay, I'm a chartist myself, but it's not end all be all, right? I mean, yes, the patterns do repeat. Technical analysis works to a certain degree, but then it tells you the past, doesn't tell you the future. And you know, whoever depends on it starts drawing lines and creating personal biases. And then, I mean, I could draw 50 lines. I like my charts naked, as you guys will see shortly. If you can't read naked charts, I'm not even sure you should be trading, honestly. And then, indicators. People ask me, what indicators? I'm like, every indicator is a lagging indicator. There's not one that tells me the future. So, look, keep it simple, stupid is my motto. I do know the game as well as anybody, if not better than anybody that I know, especially the option game, especially trading. I've done it for over 30 plus years. I do it in my sleep, mostly on autopilot. But the point I'm trying to make is I still pay very close attention to my equity. I pay very close attention to risk. I have an exit strategy when I buy it. Where do I buy this thing? Where do I get into this thing? Where do I get out of this thing if it goes against you? Because there's no guarantees. Sometimes it's going to go against you, right? If anybody says that I have nothing but winners, run the other direction. They're full of it. So let's look at some charts. I'll start with a couple of indexes, and then I'll go answer questions. This is SPY. Look, we're grinding higher. We're just building. Let's go to big charts. We're grinding higher. I mean, that's it. There's a little channel that I had to draw begrudgingly. It's not even accurate, probably, but then let's say it is. The top of the channel is about 66.50. We're above all moving averages, 20, 50, 200. Those are the ones I follow. I left this long-term uptrend here. It goes back years. We almost bounced off of that during the April crash. And then there's an upper channel. Look, we're expanding. We're in like a fan kind of a situation here. But then with a couple of okay corrections, maybe 3% or so, 4%, we didn't have any corrections on all this rally. This V bottom that we put in. MACD is kind of neutral to turning bullish. We're just grinding higher. And what is there to say? This is SPY. SPX looks obviously the same. So this is SPX. I don't even have lines on that. Triple Q, same thing. I have a couple of lines there, but not much more. Triple Q is kind of lagging. So I also talked about me paying very close attention to now Russell 2000 because lower interest rates are loved. See, actually Russell 2000 is outperforming. I said that last Friday during Power Hour, and I said it on Monday during Trading with Sergio Live, and today. In fact, I was on a Discord server yesterday for quant data. I said, got to pay attention to IWM now. IWM has underperformed SPX and Triple Q by a wide margin over the last 5-6 years. And that's because in an interest rate hiking cycle, small companies don't do well. And will they do well on an interest rate lowering cycle, which everybody's expecting? Although I don't think Powell said exactly that. I think Fed's in a box. I think they're in a stagflation box. I've been talking about this for a year. You guys will hear this on CNBC quite often going forward now. Stagflation, for all of you who don't know what it is, it's a stagnant or slowing down economy with higher inflation or hotter inflation. Well, CPI, PPI is hotter than expected. Fed's mandate of 2% inflation with full employment is not there. In fact, employment picture is getting worse. Ask any college graduate these days. And but that's why so if we do get in the interest rate cutting cycle, add all assets at an all-time high, which is not making any sense, but then that's why a lot of people are expecting a melt up in all asset classes, including crypto, gold, obviously, and stock market's an all-time high. Gold's almost an all-time high. Bitcoin, Ethereum, all-time highs, very close. Dollar index is going lower and lower. So we got to pay attention to all these things. This is dollar index. I understand you can't trade, day trade on macro, but you need to be aware of macro, what's going on. And I think stagflation is a real deal here, right? If the economy is slowing down, if we're cutting the rates because the economy is slowing down, market's overpriced. But market will figure that out. If we're cutting rates, what else would we be cutting rates? Why else? I mean, you'll study the Fed, you'll figure it out. Fed is the gas and brake pedal of the economy. Why would the Fed cut rates if everything is great? I don't know, but market will figure that out. But all asset classes being at all-time highs and Fed going into QE or an interest rate cutting cycle, again, what the Fed is going to do affects the short end of the curve. Long end is not even listening. Long end is oblivious to what the Fed is doing, what Trump is doing. This is TLT. This is the 2x ETF of the Treasury or bond ETF. Not 2x, it's a bond ETF, TLT, right? So we just bought that 100 shares of that. We'll keep buying. Last September, when the Fed cut the Fed funds rate by 50 basis points, TLT was 101.64. So this is an inverse indicator, by the way. TLT going lower means actual interest rates on the 20-year bond is going higher. Look where TLT is today, 86.50. In fact, it's down today. So, you know, the jawboning and the cutting rates and this and that, the bond market's too big to listen. The bond market doesn't care what the Fed is going to do. The Fed can only affect the short end of the curve. T-bills, right? Maybe up to 1 year, because that's what they can do. Now, the long end is not listening to it because of our 37 trillion in debt to be 38 in 100 days and the interest servicing cost of that debt, right? The buyers of these bonds, 20, 30-year bonds, are going to require higher returns, justifiably so, because the dollar is also, you know, has lost about 11% of its value so far this year, and that's the dollar index, which is against a basket of currencies, about to make lower lows probably. So if you're a foreign investor, and I did a really popular video called "Who's Holding the Bag of 37 Trillion?" You guys go check it out. It's on the channel. It was released a few days ago. If you bought a bond, U.S. Treasury, and you're a Japanese investor or a German investor or whatever you are, you can't buy U.S. Treasury bond or note or whatever you're doing investing in the U.S. You can only invest with U.S. dollars. Well, if you bought this U.S. bond, let's say December last year when dollar peaked and then start losing value, you're automatically losing 10-11% on your money, because when you do take that out, you have to convert it back to your own currency and go back, right? Take it back. So on one end, there's currency risk developing here for a lot of bondholders, and then they're requiring higher rates, and that's why TLT is where it's at. I mean, you know, President Trump can say all he wants, that, oh, I want lower interest rates. I'm like, yeah, but why do we want lower interest rates if everything is good? And market's going to sense that pretty soon. Why are we cutting rates here at all asset classes, all-time highs? If the economy is softening, market's expensive. It will show itself up in 6 to 8 months, but we'll see. At the moment, you know, no harm, no foul. And let's take a look at Nvda. Here we go, right? I mean, MACD is actually now positive on Nvidia. If I were to do anything on Nvidia, if you put a gun to my head and say, do a trade, Serge, I would be either buying some puts or, you know, shorting the shares itself, or the 2x ETF, which is NVDL. I'll look at some options. You know, we did correct to the 50 EMA on that one and bounced, obviously. Now we're about to retest the all-time highs. Same thing on Nvidia. We're literally like a couple of dollars from an all-time high. The volume has been contracting though, and I mean, you know, 5, 6, 7% move, potentially down. You know, MACD is on a sell actually, even with this last rally of about 12, 14 points. We're still on a sell. I mean, I watch MACD, you know, here and there, but it's not, you know, I'm just looking at the chart. The chart looks like a double top to me. Again, this chart is jargon. Well, let's look at some options on Nvidia. Let's see how expensive these things are for Friday, and then I'll go back and answer some questions. And if you guys want to come on, you come on. August 29th expiring options, which is this Friday. This is how expensive they are. Let's see what the IV is on these. So stock is 182. Let's look at 180s at the money, 182 and a half. They're about 108 IV. There's no skew to the put or the call side. The puts are about 108 IV as well. So stock is 182. Friday expiration 182 and a half are 570. What does that say? That's actually doesn't say 6% move, does it now? That's almost like 3.5% move. So the market makers are pricing it that the stock is going to move about 3.5% by Friday. Okay, that's interesting. That's interesting. Okay. And let's look at way out of the money calls. Let's look at like the YOLO calls, 200 calls for Friday, 200 calls for Friday, 85 cents bid, trading 60,000 of them today. I mean, the volume is insane on these. Some people are going into 205 calls. There's 20,000 of those traded, 11,000 of the 210s traded. 210 by Friday, folks. God help them. And they're like, the 210s are 20 cents. Look, sometimes that works. But tomorrow's opening, if the stock is 182, all these calls and these puts, these out-of-the-money puts are going to die. Like literally hit the wall, go to a penny or a couple of pennies, right? And the puts are the same thing, by the way. Let's go look at the way out of the money puts. Stock is 182. Let's look at like 160 puts. They're 50 cents, 52 cents bid. And they're trading. They're not trading as heavily as the calls, but they are still trading in the tens of thousands. So it's very active option chain. Now, if you do go out another week to next Friday, as you know, markets are closed on Monday for, I think it's Labor Day, or no, Memorial Day or Labor Day, one or the other. I don't know. So let's look at way out of the money calls going to next Friday. So now you guys can already see the difference in implied volatility. The Friday implied volatility was 107 for the at the money calls. Next Fridays are 59. You guys see the difference, right? So if you're going to play, why play and pay IV of, at the money IV of close to 60% versus, 108% versus 60%. And if the further you go out, by the way, obviously, the lower the IV is going to be. But next Fridays at the monies are 59. And the 200s are $1.35, $1.36. Now, these will not hit the wall tomorrow because IV crush is going to happen to a lesser degree, although it's not going to hold its 57%. In that one, you have to look at HVR, historical volatility. On Nvda is probably in the 40s. And so this will lose some data or there'll be some decay on this because of IV crush, but it won't be as huge as it would be on the Friday calls. So 57%. And they are $1.35, and that's under the assumption that the stock is going to be 200. So if you do buy these calls, you're saying that stock is going to be 201.35 for you to break even by next Friday, which you're losing a day, trading day on Monday, by the way. So is it possible? Sure, of course it's a possibility. I don't know. That's why we have a market, and they are very heavily trading. The 200s are trading 16,000. They're not as heavy as the weekly ones. YOLOers are in there buying and selling these things. If you go to regular expiration September's, and now we can see almost still increased implied volatility, but not as high as weeklies. So regular expiration at the monies. Let's see the implied volatility on those. Now we're down to 46%, right? You guys are seeing, right? So this Friday's is 108%. Next Friday's is 57%. And the regular expiration third Friday of September is 46%. It's pretty close to the historical average. You still lose a little bit on that, but let's go look at the 200s. See, the 200s are $2.50. So why would you go pay on the 200s $1.35 for next week instead you're giving yourself some time? Yes, it's almost double, but you're dealing with 45% implied volatility versus 57% versus 109%. So the market makers obviously adjust these IVs, and this will have very little IV crush. And if you're bullish on Nvda, this would be the option. If you're YOLO into something with limited risk, Nvda could go to 150. All you're going to lose is 245. So if you're bullish, you can do that. You could do a synthetic. You could sell a put. You could buy the call with that credit. There's endless variations of this. You could do a long strangle. You can put on a strangle with the high implied volatility Nvda has. For example, you could put on a short strangle. I'm just giving examples. I'm not telling anybody to do what. So stock is 182.5. If you're thinking, okay, stock is not going to be 200 or 160 by Friday. So we're going out 20 away from where the stock is at. Basically, we're going out 12% up, 14% down. So you can go sell, strangle 160 puts at 52 cents and with an IV of 117. And then you can sell The 200 calls at 82 cents with 104 IV. So you're taking in about $1.35. By this Friday, if the stock is between 200 and 160, all that premium is yours. That's called a short strangle, right? So, but could the stock be 220 by Friday? Yeah, then you're toast. Could the stock be 140? Highly unlikely, but you're toast on the downside. So, short strangles have its value, but when the IV is this increased, it's in many cases it's the proper thing to do. But then you have to understand, like, for example, I'll just price it out. So selling the 160s and selling the 200s. Okay, so I'm taking $1.35 credit. So I'm all auto set on 5 options always. So let's see what this is going to cost me in buying power. Actually, it's not that bad. It's about $9,000. Now you have to understand, I'm on a margin account. Doesn't mean I'm not paying margin. I'm not paying interest, but on a cash secured account, they would charge you the whole thing. This is very little. $10,000 or $9,000 for 5 options is about it's about 1,800 per option, and for each 1,800, you're taking in $135, almost 8% for 2 days. Seems like a good deal, right? But if the stock is above 201.35 or below 158.65, then this is a losing position. But with that kind of body width, I mean, it seems reasonable to me. I may actually do that just to play, but then I don't get bored and I don't want to play. So yeah, that's where we are on Nvidia. If you have any questions, please put them up. I mean, if I were to go YOLO into this thing, I will go buy some straight puts or a put spread, put debit spread. Let's see where those are at. So if I go to not Friday, next Fridays though. Let's go to next Friday. Actually, you know what? Let's go to September. Regular expiration 47 IV. You're going to pay more, but I think you have more time to digest. Let's go to 180, 170, put debit spread. We're buying the 180 puts. No, this is not what we want to do. We're buying the 180 puts and we're selling the 170 puts. $3.60 debit, about 3 to 1. That's not a bad trade, actually. So you can go further. If you think Nvidia can get to 165, then you can go buy the 180s almost at the money at 745. This is September 19th, regular expiration, by the way. And go to 165s. Now you're paying $475 per put debit spread. And your spread is 15 wide. So again, 3 to 1, kind of, right? And the other thing you can do, obviously, is, you can also now go to lower the cost. You may really like Nvidia, maybe at 155 level. Okay. So what you can do is you can buy the 180 puts, sell the 165 puts, and or yeah, actually, you know what? I may actually do that. Buy the 165 puts and then sell the 155 puts, some more. Maybe 2 to 1 or so, and lower your cost to 345 with the clear understanding that you're willing to get assigned Nvidia at 155 by September 19th. The other thing you can do as opposed to a short strangle for Friday, what we can do, we can put on an iron condor. We can short that actually may make sense. How much money can we take in? We can sell the 200 calls. Sell the 200 calls. So basically, your iron condor is you're selling a call credit spread and a put credit spread and hoping that you're staying within the body. Stock is 182. Let's go sell the 200 calls, buy which ones? We buy the 205s, let's say. Okay, we buy the 205 calls. And then we go sell a 1. Okay. We go sell a 160 put and buy a 155 put. So basically our risk is $5, right? 160, 155, 200, 205. So our max loss, we said it already. This is a defined risk trade from the get-go. I will collect 66 cents for my trouble for Friday for this. So I'm collecting 66 cents, but my max loss is $5 though, because of the wings, right? 200, 205, and 165, 160. So if the stock is anywhere between my bodies of 200 and 160, the 66 cents is mine. So with the naked short strangle, 200, 180s, I was collecting 180, 135, but my requirement was 9,000, basically 1,800 a piece. So let's see what the requirement is. Look at the requirement here. Only $2,178. And that means about $450 per option, and I'm taking $66. That's about 12%, as opposed to 8% on the strangle. So I may do this iron condor, actually, maybe 20, 30 lots. And if by Friday, well, not by Friday, by tomorrow's open, if the stock didn't move, and the max loss on this is set for 5 options at $2,500 for each position, by the way. So, well, at $500 for 5 options instead of $2,500. So I'm taking in 66 cents, but I could lose if it's not between, if it's above 200 or below 160. What are the odds of that? Not too high. You're dealing with pretty high IV. I think I'm going to do that. They will increase the IV on this the closer we get to the close. If the stock is staying sideways, which it is, they'll probably pump in some more IV juice into this, and then I'll do those at that time. Okay, so I hope you guys understood everything. If you didn't, then you can come on and we can discuss it. So let's go to the front. Let's ask you some questions. Nobody wants to come on? There's the link up there. Scott, 3 ETF for a growth portfolio, 3 ETF for a dividend. Okay, I'll get back to you. I'll put it on the Telegram chat group for you. And for other members who are here, can somebody put some suggestions for Scott? 3 ETFs for growth. Now, I'm assuming you don't want leverage ETFs, right? Because they're not supposed to be bought. They're not supposed to be traded, by the way. They're not supposed to be bought and held. They're supposed to be traded. So straight up ETFs, Okay, we'll put those up. We'll help you out also. Alba says naked. Yeah, naked's well better, but the other one, the iron condor, is pretty good. 200 160 body with the wings 5 wide. Taking in 65, 66 cents for each 400, about 12% return. If the stock is between 200 and 160, we're at 182. So we're playing 182 to 200 is what, 18 points? We're playing 15% up and close to 17, 18% down. Is Nvda going to move 15% up, 17, 18% down? I doubt it. Next 2 days, by the way. By tomorrow's open, it'll be decided. Both sides will hit the wall, and then you'll collect the premium. You'll probably suck about 80, 90% of the premium out. And in those cases, should you close it? I usually close it at 90%, 95% if I put it in iron condor. So iron condor is a position that you don't want too much movement. You want something to stay between 2 levels. That's why it's called the 200 and 160. It's the body, and then the wings are 205 and 155. I think I'm going to put that position on. I have so much cash sitting. Might as well create some income. Will says, yeah, I mean, it's been smelling like that for a while, actually. I think I did my first stagflation video like almost a year ago. It definitely smells like it. All right, Sergio, would you mind explaining that slow? Yeah, it looks like it. If you look at the money calls and puts, they're not priced at 6-7%. For Friday they are, but not for tomorrow. I mean, so all I'm trying to explain to you is the premium that you see is not factoring in the 6. I don't know where you some of you guys were putting it on the chat group, 6% expected move. I don't see that, but maybe it is. Let's go with, I think I'm gonna do the iron condor, Doug. I'll put that up when I do it. I think towards the end of the day, I'm gonna put on the 200 160 with the body and then 5 wide wings for 66 cents. For in my account, it's taking me $2,100 or $2,200 to do it. That's pretty decent. I think I'm gonna do that. Yes, Labor Day on Monday. Sorry, I mixed those up. How would you protect your iron condor if it goes against you? You have already defined risk. There's no protection. I mean, look, if it's going completely against you, if it's above 200, you have defined risk. One, you can close it. Number two, you can buy the stock if you want, right? But or the ETF, you can do many things. But you're already starting with defined risk. Now, if I was naked strangled, then yeah, then you can go buy the calls above it and turn the naked strangle into an iron condor. But I don't think it's going to be necessary. Arnaldo Cruz, what's up? How long have you beaten the market? Your 60% gain, your dimension. Well, depends on what you do. I take more risk. Actually, I was up close to 74%. I'm working on about a 11% drawdown, which is fine. But I'm about to close everything out, to be honest with you. Just go all cash, because when you do that, I trade my equity. Full transparency, I trade risky stuff. I do risky stuff, right? If you're just selling cash secure puts and collecting premium, 30% is fantastic. Right? You're getting about 4% a month, 3-4% a month. It's fine. I take a lot more directional bets, because my point is, if I'm going to trade with a 6-figure account, I have to consider slippage. I have to consider commissions. Right? I have to consider taxes. Taxes on trading is your ordinary income tax rates. So long-term capital gains are 19.5%. Short-term capital gains is at your tax rate. Well, my tax rate is at the max, and I'm in California. So if you consider all that, you have to beat. I personally see it as, if you don't beat the index by 4, 5, 6x last year. It's on the channel, full transparency, all the charts, all the account numbers, and everything is there. It was 120% because last year was easy. Last year we didn't have the overnight risk. We didn't have the tweet risk. We didn't have, I'm going to say something, going to blow your face off risk. We didn't have any of that. So this year is like, I'm trying to tiptoe. Even that way, I mean, it's been more stressful this year. Last year's 120% was a lot easier than this year's 50%, 60% now. I think I'm like 58%. And yeah, I'll get back to 70 probably by the end of the year, because I'm really taking it easy. The chat group knows. So, but I trade my equity. I pay attention to my equity, man. I don't pay attention to anything else. I trade it. I look at it. It's green. Okay. Well, that's your scoreboard. Scoreboard doesn't lie. All your positions are getting marked to market every second of the day. A lot of people look at, oh, this position, that position. I'm like, I really don't care. I look at it as a supermarket basket. I have 5 now. Those are the 5 things I have to make a good meal with. About a month and a half ago, I had 20, 18, I think, something like that. Well, now I'm not hot. I'm just cutting exposure. You need to know when you're hot. You need to know when you're cold. You need to know when you press. You need to know when you pull back. And size correctly, for sure. Like if I do this Nvda iron condor, most people think it's a no-brainer, and I'm just going to do 100 of them. I mean, I could do 100 of them. My account will carry it. But then the risk is so much higher, right? And like the one question asked, you guys can hear me? Put a thumbs up. So the risk is defined to $5, but I'm only taking in 66 cents. So if I put in 5 of these and collect $330 for that iron condor, for each 5, my risk is $2,500. It's capped at $2,500, right? And because both sides are not going to be in trouble at once. Either the call side is going to be in trouble, or the put side, the call credit spread or the put credit spread. So to me is like you understand risk, you understand the structure of your trade, you understand why you're doing it, and you positions correctly, you size correctly. You can't go size like to the point that it blows your account out of the water. You just can't do that. Just can't do that. Yeah, a lot of people. Well, I mean, look, you better be beating the market by 10%. The reason I'm saying that is, I mean, look, markets just done nothing but go up. How did you do during April? If you want to grab the link and come on. How did you do during April when we sold off 20% and most stocks went down 50%? How did you do then? Did you let everything slide and then roll back up for you? Because there was no guarantee that it was going to be a V bottom and it was going to come back with a vengeance, right? So that's when you like, well, my drawdown during April was about 11%. Most people's accounts went down 50%. I can't play that because that math doesn't add up. So if you have a $100 account and it goes down to 50, you have to have 100% return to get back to where you were, right? If you let things slide to 50% down, you need 100% to get back to even. That's a tough game to play. But if you only set your drawdowns at 10, 12% max, you only need 15% to make an all-time equity high in your account. You have to play that game. You can't just go, Magic Mountain roller coaster ride. I can't. In my trading account, I can't. Investment account is a different story. Trading account, I can't do that. I mean, it takes too much stress for me. I just can't do it. I'm not in that. You guys have been talking about INHD. I don't even know what it is. I don't either. I think somebody posted that they made some money with day trading that thing yesterday. I hope it's good news for you guys. I don't know. I'm not in it. Like I ain't touching much, man. As you guys know in the chat, the members know I'm cold as ice. Although I don't mind buying the stock I'm buying. Yeah, so beating the market's great, but you have to figure out the factors. You have to figure out the costs. There's a lot of costs, like Robinhood. If you have a Robinhood account, they say, "Oh, it's free." I'm like, "There's nothing free. There's a slippage. There's cost you're paying." Executions on Robinhood suck. I have a Robinhood account, but I mean, I don't trade on Robinhood. I trade on Thinkorswim. But you're paying a cost every time you trade. So you have to factor all that in. But beating the market by 10% is okay. But you should, if it's a trading account. If it's an investment account, yeah, good, great. There's not that many geniuses beat the market. Not that many hedge funds beat the market. Not that many. No, but 90% plus of mutual funds don't beat the market. So if you're doing that, great. But you have taxes to pay, you have this, you have that, you have to consider all that in. There's no US dollar evaluation. The dollar is back to United States All Reserve in the military. There's no US dollar evaluation? I don't know what that means. The dollar is backed by the United States All Reserve in the military. I'm not sure about that comment. I don't know what that is. Oh, devaluation. There's no devaluation? Did you see the DXY chart I put up? What are you talking about? US dollar has been debased and devalued for years. Okay. I don't want to argue with you, but if you want to come on the chat, grab the link and come on. So I'll ask you this, G Money. Pull out $100 bill out of your pocket. Okay. All right. What's it say on it? It says $100, right? Nominally, it says $100. It's a C note. We all know it as a C note. Okay. So now take that $100. Let's go back just 5 years, not 20, not 10. If we go back to 20, that $100 is worth zero. But let's do it. Let's go back 5 years. What did that $100 get you 5 years ago? And what is that $100 getting you today? Okay. All right. Well, I think I rest my case on that one. Because you're losing 6-7% buying power on the dollar every single year. That's why you have to invest. That's why you have to do things. That's why you have to be in hard assets. That's why the hard assets are doing what they're doing, because the government printing and spending and printing and spending and increasing the debt load is the reason for your dollar to be worth less and less and less, because we have a lot more of it out there, right? It's a supply demand thing. There's a lot more dollars in circulation. because we print and pump it in. Well, that helps the asset classes. All asset classes are at all-time highs. Gold, and we'll look at gold in a minute. Bitcoin, Ethereum now hot, right, because of Tom Lee. So it's I mean, to me, it's not an argument. It's a no-brainer. You have to invest. You have to invest in hard assets as much as you can. You have to dollar cost average. If you're not a trader, if you're a trader, you have to beat the market by 5-6x to make it worthwhile your trouble. What do you think of the success rate is for the high frequency? Very, very high. Guaranteed money. Go ask Citadel. Go ask Citadel how much money they make every day. They're guaranteed money, bro. They're front running every single order. They're the largest market maker on the planet. So for people who don't understand high frequency trading, I do have a high frequency trading system, but it's nothing like anything else. Mine trades maybe for nickels and dimes because it's trading now, actually. But Citadel, for example, what do? Their servers are co-located at the exchanges. So they're getting the price of something or order flow. They're seeing order flow about hundreds of a millisecond faster than anybody else on the planet. So they're basically front running every order. They're basically guaranteed to make money on every single order that they execute. So what they do, let's say there's an institution. They see an institution about to buy 1 million shares of Apple, right? It happens all the time. Well, what does Citadel do? It goes hits the market. Citadel sees there is a 1 million share buy order coming. Citadel will go buy ahead of them and sell it to them with a penny or two profit. And that's the slippage, you guys. That's what, order for market flow, right? That's what Robinhood does. All of you think Robinhood is free of commissions. Robinhood is not free of commissions. Robinhood is not free of anything. I love Robinhood. Don't get me wrong. I'm not talking shit about Robinhood. I think it's an amazing platform. I think the best UI, but executions are not good because they send your order to Citadel, and Citadel front runs you and makes a penny on you every single time. And Citadel trades billions of shares a day. HFT, by the way, is probably close to 70% of the market volume these days. Yeah, high frequency algorithms. Yeah, money makers, guaranteed money. Now it costs hundreds of millions, billions to set that up. Okay, the algorithms they throw in there, they have these extremely high priced math PhDs and things like that. They're just constantly writing algos and throwing it into the market depending on the VIX. Actually, we should look at VIX. Look, there's many variables and there's many levels to the game. HFT is as guarantees as you can get though. But if you're not co-located servers and your distance from the first price is not what you're seeing, don't do it. Don't do HFT. You will get nailed. But Citadel prints money. Jane Street prints money every time. Every time you send an order to Robinhood, Robinhood ships it for credit to Citadel. Citadel will pay Robinhood. Otherwise, how's Robinhood making money? Robinhood will ship it to Citadel. Citadel will execute the order, ship it back to Robinhood, pay Robinhood maybe 1/10 of a penny for each order, each share, and then they'll make about 1/2 penny to a penny on each order when they execute, and everybody makes money. Cost of trading has collapsed. I mean, in my day, we used to trade in eighths and quarters and 3/8 and halves. Decimalization came, right? Volumes increased. They have to make money somehow. They're spending all this money. They have to make some money. So anyway, let's go back, look at VIX. I wanted to actually look at VIX. In fact, maybe I'll execute the Nvda trade before I leave. Let me take a look at it one more time. Where is VIX these days? 14, right? Unbelievable. I mean, I was like, look at VIX. Gosh, it's green today. Yeah, but it means nothing. You guys know what VIX is, obviously. Volatility index. Every time VIX goes up, market's crashing, right? This is the April crash. This is the little pullback that we had. So if you look at it, it's like almost an inverse indicator of SPX, right? Yeah, market's just grinding to a new all-time high. We're really, really close to it, and we're almost there. Yeah, VIX is, volatility is being suppressed. All the option sellers are there selling options. Would I sell options with VIX at 14.5? No, because everything is off of that, right? All the volatility numbers. I mean, look at that. It's like But long periods of suppressed volatility will lead into increased volatility at some point, right? They'll be like this day last September or whenever this was, this huge spike on VIX, right? But every volatility event on VIX has been sold, and it should be because it doesn't last. But it depends why VIX is going up, by the way. I respect Jem Carson quite a bit. This is the 3-year VIX. This is what happened last August during the Japanese yen carry trade crisis. In 2 days, VIX went from like 15 to 65. And they do trade futures on this. They do trade options. You really have to understand. But, volatility index, when it's this suppressed, like for long periods of time, which we have now equaling here, probably a volatility event is around the corner. And, but then you buy index puts, you can't make money with it. You have to be so nimble, just so difficult to make money when buying index puts. I mean, you can short stocks, obviously, but, short side is really difficult in the market. You have to be on top of it. I want to look at NV. Actually, why didn't I think of that first? NVDL is the 2x ETF of NVIDIA. It's a 90-90. Why didn't I do that? Why didn't I do the Iron Condor on NVDL? Huh. Okay. Let's take a look. Expiring Friday. So I was doing the 200, 160, 40 wide body. So that means what? 18 points up, 22 down, 10% up. That'll be equal 20% on NVDL. And 180 to the 160 is 22. It's about 14% down. We'll go with the same. So index is 92. We'll go 20% up because this is 2x ETF, right? We'll do it with these. They are pretty tight and they're trading nicely. So August 29th expiration. Index is 90, 97, 91, let's say. So let's go with 20% up is 18%, 18 points. So let's go with 108 calls. Very nice. Okay, let's go with the 110 calls. So we're selling the 110 calls. Yeah, let's see, 110. Where is the offer? Shoot. Okay, we'll go 110, 115. Same 5 wide. But this is a 2x ETF. Okay, let's do that. We sell the call, 110 call. This is index is 91, folks. There's 73 cents at 200 IV. I think I'm gonna definitely do this. And we'll go buy the 115 calls. That's one side. On the downside, we go 20%, 18 points. We go, let's go with 75 and 70. Or, yeah, we'll go with sell the 75 calls. 75 puts and buy the 70 puts. The spread is wide, 32.52, but I'm sure we'll get halfway there. I may leg these on individually. Oh, not the 70.5. Never mind. 70. Let's go with the 70. Okay. 90-cent credit. Almost $1 credit. And what is it going to cost me for each one? $2,058. It's going to cost me $400 to do each one. And I'm only taking $100. Wow. What could go wrong with this picture? My max loss is 5. I'm definitely doing this. Yeah, I could be in trouble if NVDL is over 110.90 or 74.10. We're at 92 or 91. Seems like a no-brainer, right? Let's reprice that one more time. Okay, so that's what I'm going to do. Actually, I want to focus on it when I'm doing it. I'll probably do about 20 lots of that. So $2,000 it's going to cost me to do 5 options, $400 a pop. I'm going to take in 90 cents, $90 for each 400. That's 22% for Friday. Yeah. Don't do what I do, folks. Okay, please. But if you have questions about this trade, Ask me. No questions? Nobody wants to come on? Okay. I'm going to go execute that trade. And actually, let's execute it. Let's do a live trade for you guys. Let's do it. Okay, so what are we doing? We're going to go sell the 110 calls. Okay, on NVDL, which is the 2x ETF of Nvidia. We're going to go buy the 115s. So that's the call credit spread. Now we're going to do a put credit spread. We're going to go sell the 75 puts. Should I go lower? No, 75 is good. Sell the 75 puts and buy the 70 puts. 87 cents. It's cheaper. No, we're not going to do the 87 market maker. We're going to ask for 90 cents for 5. Let's see if we can get it done. Go about halfway because those spreads are wide. They're about 6-8 cents wide. See, you guys understand about width and slippage. Cost me 2,058 cents. Oh, they didn't do it at 90 cents. Okay, we'll go back to monitor. This is the NVDL. This is only going to get worse by the end of the day. IV is going to happen. Create duplicate order. Let's do 5 at 85. 85 cents. That's the minimum I would want to have. Okay. Wow, they're not even doing it at 85, bro. Wow. No, that's it. Yeah. I can leg this in for sure and get better than 90. Yeah, these are the problems with market makers. I used to be one. We just don't give it to you if it's a good trade, honestly. Okay, we're going to go leg it in. I'll do that in a minute. Actually, I'll do it here. Yeah, they're not doing it. They're not going to do it. They're going to dick around with me and frustrate me. So if you guys want to play that way, we'll play that way. We'll play your game. No problem. We will play your game, market maker. Okay, let's do it. Let's do it. What can we do? Let's sell the 75 puts first. 85 cents. Let's see if we can get 5 off at 85 cents. Done. Okay, let's finish the credit spread. 35.41. I'm going to buy 5 at 37. Done. Okay, so what do we do the call side? 85.37. What is that? 85.37 is 48, right? Okay, so we took in 48 cents on the put credit spread. Let me write that down. Come on, man. 48. Now let's go to the call side. What were we doing? 110s, right? Okay, let's sell. 110 is so far out, but that's okay. Whatever. Let's go 72 cents. Done. Okay, we did that at 72. Let's go buy the 115 calls. Let's buy them at 35. Uh, 36. Done. We legged in. So we are in NVDL. And what do we do that at? We did, we'll look at that in a minute. Okay, so here's that new position. All right, so we did the 48 cents on the put side, 75.70 put credit spread. And the call credit spread, we did it at 36. Right? 36, 48, 84. Yeah, 84 is pretty close. I gave them 85. They wouldn't do it at 85. They probably want 80. So I gained about 4 cents. Sounds good. Yeah. So we did 5. I'll do more. I'll probably do. I leg it in. Sometimes legging is good because the bid and ask spreads are pretty wide when you go that far out of the money for a couple of days going. And yeah, okay, cool. So we're in NVDL, and this is what the position looks like. I will add to it for sure, so you guys can see that on the chart, right? It's not even showing the top of it because it's so far out. So this is NVDL at 91. So my short put is 75. My long put is a 70. So this is the red line. If there was a red line up here at 110, there will be a red line. I'm short the 110 calls and long the 115 calls. And so my body is between 75 and 110. For the next 2 days, if NVDL stays between 75, well, actually 75 plus 84 cents. So 74.15 and 110.80. All that premium is mine. Okay, looks good to me. I will add to this without a question. Without a question, I will add to this. I think it's a good trade. Maybe 75 is too close. You guys may say, well, that's 16 out. Yeah, that's more than double the expected move if it's 6%. So I'm okay with that. I'm definitely okay with that. In fact, I don't mind buying NVDL at 74.15 for a trade anyway. So I have many choices now. So I have 2 days. Tomorrow morning, actually on Friday, if I still have the position, if IV crush happens, I don't expect to be in it. If I collect 85, 90%, I will close it out. Because people go like, why are you not closing? Why are you leaving some meat on the bone? I'm like, better be safe than sorry. It has happened to me in the past. I have not covered nickel options and they turned into $5. So I've seen it all. So that's that trade. Yeah, looks good. I will definitely add to that trade. 85 to 90 cents is where I would do it. I think it's pretty decent at that level. 85 to 90. Oh, actually, it's showing on the small chart. Okay. All right. So you guys see the 2 red lines. This is the price, 91.11. Top is 110. Bottom is 75. In the next 48 hours, if it stays between these 2 red lines, this trade is a 100% winner. My defined risk is 5 wide. Yeah, I like this trade. And my if I do get assigned at 74.15, it's in this support at 74.75 range. So yeah, no problem. Okay, cool. I will definitely add to this position. Let's see if you guys have any questions. I'll probably put on maybe 25 of those. No questions? Nobody wants to come on? You guys are all watching? Come on, man. Somebody come on. No? All right. I'm going to log out. I'm going to go do more NVDL Iron Condor. It's going to go like, why are you doing it? I'm like, okay, so I'm collecting. I'm putting up $2,000 to $2,100 for 5 options to collect $420 for 5 options. That's 20%. And looks pretty good to me. There's always a risk. Don't do what I do. But it's a reasonable trade to be involved in, especially if you want to play the earnings. I'm not sure what's going on. Did I get cut off? No. All right. I'll see you all on YouTube and X, hopefully on LinkedIn as well by Friday. For Power Hour, 10 a.m. Pacific, 1 p.m. Eastern. Thank you for the support. Put a thumbs up, please. It's supposed to help the algo. My manager says so. Number 2, please share if you like it. Please subscribe. Turn on notifications so you know when I'm going live. I think I run the most transparent channel, finance channel anyway, by far. But I'm doing it to pay it forward. I'm not in it for YouTube money or whatever. I don't care. Pay it forward. Teach you guys how to do this properly. Weigh the risks. Like you said, Serge, why don't you go to like 100 of those iron condors? It seems like a no-brainer. Seems like it should stay between 75 and 110. It probably, most likely will. The odds are that it will, right? Just the IV crush is going to take care of it. But the point I'm trying to make is there's no guarantees. Nobody can tell me that. What if Nvda says 2-for-1 split or something? It'll fly. It'll just go above 110. So that's why you take the risk. You know your risk. You know, it's defined risk trade. It's 5 points is most I can lose. You know, I'll put on 20 lots maybe. I can put on 100. Honestly, I can, and I don't want to. There's no reason for me to do so because the risks. You know your risk, what your risk is going in, and you need to have an exit strategy. Anyway, my hat's off. Vamos Barca, Barca forever, and what else? That's it. Much love. Stay healthy. Life is short. Play hard, and I will see you guys Friday for Power Hour. By then, we will know how this thing turned out. And I will post for the regular subscribers, I will post my positions by 2 p.m. Pacific, maybe, on the community page of the YouTube channel. So then you know how many more NVDLs I put on. Okay, cool. You all take care.